Well, one chart certainly says it all. The number of working natural gas rigs in the United States down about 60% in the last year, as you saw from that chart, a steep drop-off. Now, reduced demand and falling prices have put nat gas supplies at record highs in July, and that's definitely creating some challenges for drillers. Do they keep drilling, expecting prices to rebound as the economy improves? Bud Brigham runs independent driller Brigham Exploration, and he joins us on this Wednesday from Dallas. Bud, good evening. Nice of you to join us.
Thank you for having me, Carol.
You know, we just showed a chart, Bud, showing the number of working nat gas rigs in the U.S. down 60% in the last year. You're an oil and nat gas explorer and driller. Let's talk about natural gas first. I mean, what do you do in this type of tough environment where prices have plunged, supplies are at record highs, you've got less industrial use, and we're in a recession? What do you guys do?
Well, basically for us, as far as our natural gas drilling, we're hibernating. It's a very difficult time. When you look at it, there are 5 or 6 high-quality natural gas resource plays domestically, and industry's done a great job. There's a lot of supply of natural gas relative to demand, but we have seen, as you said, the rig count has come off very dramatically, and that's going to show up in the supply. So it'll be self-correcting. There is a real commodity advantage right now for oil, and so there is a real divergence here, a real differentiation right now for the oil players, and fortunately players such as us that are in the Bakken Three Forks play of North Dakota. We see that as the one high-quality oil resource play, and ironically, we stand to benefit from the low natural gas prices.
You mentioned, though, hibernating. I mean, how much longer do you expect that to continue, you know, with the rigs down? I mean, do you see any signs that things are starting to improve, or no?
No, we do. I mean, the rig count, of course, is the first indicator, and of course, the supply will follow that. And actually, we're already starting to see the supply reflect that. So, you know, I can't forecast the price, but I think looking at the fundamentals, I think have to be optimistic that this winter, you know, we get some cold weather, things reset. But over time, that supply is going to be come down commensurate with the rig count, and we'll see it balance out, and we'll see higher natural gas prices.
All right, I also want to talk about oil, because you guys just announced, what, a 2,000 barrel of oil equivalent at your Three Forks well in North Dakota. I think it's its largest initial production rate in the region. Now, that initial rate is second only to oil and gas giant XTO Energy. What led, first of all, to the success?
Well, it's a very exciting well, and really it's been a string of wells. We've participated with other companies in about 80 wells in the play, but we've now drilled 16 of our own wells, and we've seen a progressive, almost well-by-well improvement in performance, and it really comes down to 2 things, Carol. One, we're fortunate our acreage is in the core of the play. It's a huge position for a company of our size, but 2, it's a technology-driven play, and that's our core competency, leveraging technology. So technology continues to improve. We expect the results to continue to get better.
What's the overall reserve potential in Three Forks?
Well, it's hard to say because it is early right now for the Three Forks. There have been about 80 wells drilled for the Three Forks. So I think the best way to look at that is to look at the Bakken, because the Bakken's had over 1,500 horizontal wells drilled. They're very similar. And last year, the United States Geological Survey did an assessment of the Bakken, and they estimated the reserves to be produced from the Bakken at 3.65 billion barrels of oil and over 1.8 trillion cubic feet of gas. So to put that in perspective, let me put that briefly put that in perspective for your viewers. That would make the Bakken the largest oil field to be discovered in the last 40 years. Again, it's early for the Three Forks, but industry is generally seeing the Three Forks wells are outperforming the Bakken wells. So if the Three Forks ends up being half as productive as USGS thinks the Bakken may be, the combined field could be potentially as large as the Great East Texas oil field found in 1930.
But as you mentioned, the Bakken, everybody's very excited about that. I mean, you say if it kind of lives up to the potential, the Three Forks, how likely is it that it does live up to the potential, some of which you just kind of laid out for us?
Well, it's really early to say, but I have to say it's very encouraging. I mean, our Strobeck well that we just announced at 2,000 BOE per day is our best well. It's our best well we drilled in Mountrail County. And we probably drilled 13 Bakken wells, and that's not uncommon. The other leading operators, Continental, is drilling more Three Forks wells in Bakken, because although it's early, they are seeing a little bit better performance in many cases from the Three Forks wells.
And, you know, I'm thinking investors are out there. Your stock's actually done, you know, really well this year. It's up about 26%. So they're listening to this and what's going on in Three Forks. I mean, give me an idea in terms of how soon it could impact your bottom line, potentially, really America's energy economy.
Well, I mean, the great thing about this play is right here in America, and we're an American company, American employees. It goes right into the pipeline. Our Strobeck well's in the pipeline. It goes to the Minnesota area.
Right.
Serves consumers in the Midwest. So I have to tell you, Carol, we feel really good about the fact that every barrel we produce is one less barrel Americans have to purchase overseas.
Right. But again, how quickly could it hit your bottom line? I'm just thinking from an investor's perspective, they kind of want to know.
Yeah, well, and here in the third quarter, I mean, that well's online for the third quarter. There is a real commodity advantage. You look at oil, it's trading at 15 to 18 to 1 relative to natural gas. So it more positively impacts it's more cash flow productive for the production added in the Three Forks. So I think you're going to see we're not going to be overly aggressive in this environment. We're kind of moderately picking up the pace, but we have a huge inventory, and we can gradually step it up and develop this huge field over time.
Hey, Bud, just got about 20 seconds left. I just want to talk tax policy just quickly. The administration's plan to further tax oil and natural gas companies. Does that at all impact your decision-making progress? And just quickly, if you could, about 15-20 here.
Sure. Well, it's difficult to understand that. I mean, given the economy and given our dependence on foreign oil, we have analyzed it, and it would negatively impact industry's capital available to drill, which would negatively impact production. But that being said, you know, we view ourselves as being in the premier play domestically. We're going to be in great shape regardless.
All right, good to get some time with you, Bud. Thanks so much. Have a good night. Bud Brigham,